Well, good afternoon. My name is Bill McCready. Many of you know me from my Futures Trading Secrets course that we've taught and produced over the last 15 years um, with over thousands of people using it all the time. I would like to say that I'm going to share with you what I've discovered about weekly options. It's a way to turn pennies into dollars, and the reason I'm doing this is as I advance in age, I get less and less likely to get up at 6 a.m. in the morning to go trade. So here we go, and I'll share what I discovered over the last 2 years. First of all, we always have to do the CFTC required notice that tells you can lose more money than you ever had before when you started. Government's way of trying to protect you from yourself. I will say that this presentation is for information only. We're not trying to get you to buy, sell, or do anything with any of these stocks or options. So let's talk about why trade weekly options. Now, I started this about 2 years ago because I really did get tired of getting up in the morning and I had a bad back problem. So what I discovered, there were over 300 stocks, ETFs, and indexes that have weekly options, with more adding to the pile every day. Now the weekly options, now have 52 or more opportunities for profits, so you can trade weeklies or monthlies. We basically found out that trading weeklies the last a couple of days of the week was the most profitable because you're dealing basically with gamma trades, meaning that there is no more time value. So the market fluctuates pretty rapidly. And because of the short time to expiration, you have a much greater chance of making very profitable trades. I'll show you some of those that occurred in the week of June 6th through June 30th of 2014. Now, many of the strike prices have been reduced to as low as $1 or even 50 cents, which means if you look at the average true range of a stock, which might be $5, and you have a 50% strike price increment, you could pass, 10 out of the money options just in one day if you happen to pick the right one. So a lot of the returns can be as much as $1,000. Or 1,000%, in just 1 or 2 days. So it's especially profitable to place an order at the end of a day and see giant returns the next morning, because 90% of most moves occur overnight and you get big gaps. So those of you who like to trade gaps, here's a way to really capitalize on it. So what do you have to look for? Well, first and foremost with options, you always have to analyze the underlying asset first. So we have our chart set up in such a way that you will have 1 and 2 out of the money options for both puts and calls, and you'll have the underlying analyzed for you at the same time, and we'll explain how that works in a later webinar if you elect to join us. So most of the moves take place on Wednesday and Thursday unless it's FOMC day, and the major moves on many things like Goldman Sachs and JP Morgan happen on Friday morning. So you may have to day trade that day, but generally you can trade mostly end of the day and just get out at end of the day. So these are non-directional trades of straddles and strangles that work pretty well too if you just don't know which direction everything's going to go. Because of the leverage with these weekly options, you can have a big move long and the put options go to zero, but your long option more than doubles the price of the put option. We trade mostly ETFs and a few high-flying stocks. I personally like to trade ETFs because the high-flying stocks have options that are much more expensive. I personally like to trade options that cost between 2 cents and a dime, and I've had many of them really make some runs. I had a 6-center go to $1.46, and I had another one that was, I think it was 11 cents, went to 350 or $3.50. So we're trying to risk pennies instead of dollars on the options, so that losing, everything just goes away. Don't try to put a stop in or anything else on the options when the pennies that you're risking are so low. All right, let me show you some of the option trades that took place during the week. This is a VXX put, 33.5 put, based on a 5-minute chart. And here's a couple of hints right away. You see this big, well, it's almost 6,000 options. It's like some insider knew what the heck was going on, and that was on the previous Friday. And by Wednesday, here we go with now somebody really knows something, so we doubled up. Look at this market. It goes from 0.09 to 0.4. That's a 344% return in one day. Now people ask me, do you know what's your win and loss rate? I don't really care. If I catch one of these, I'm a happy camper for the week, okay? I don't always do that. I may only catch 5, 10, 15% of the moves that occur. But I do only watch 20 ETFs and a couple of stocks here that we'll talk about later. Here's another one. These returns get pretty astronomical. Here was a lot of volume in the beginning of the year, a week, and when you have a lot of options, okay, happening, and there's no movement, that's a very good sign, because now over here on Thursday and Friday of the end of the week, the options volume went way up. A couple guys buying 100 at a time. There's plenty of open interest, and I use a Tom DeMark sequence indicator. It's available on Thinkorswim. It discounts 1 to 9 or 1 to 13, and those are indications of strong trends. If you don't know much about that indicator, you should read up on it. Pretty impressive. Tom DeMark developed it before computer analysis was available. Anyway, bottom line, price goes from 37 cents to $4.53 in the year. It actually went higher during the last day, but that's 1,100% return, 11 times your money. Here's another one. This is a Goldman Sachs call at 162.5. The option cost 57 cents, went to 3.75, a 557% return. Whoops, I went up the wrong way. Okay, here is something called TLT. It has to do with the interest rates on the 20-year bonds. Those of you that trade bonds know they move kind of like paint drying, but here with the option they move a lot more because they're brought in by the news. So here's one that went from 96 cents to $2.40, 147% return. Again, somebody knows something. There was a 150 order. Here's another 100 order. Didn't go anywhere really that day, but the next day it jumps up, and it jumps up again, and you get the pretty nice return. We didn't pick the high here. We just got out at the end of the week. Here's one that took 3 days to generate. This is TBT. It's actually the opposite of TLT. And this is a 61.5 call. Let me see. And the TBT was a put. So they're just opposite sides of the same thing. Again, you get into low. Sorry. Where am I? You get in at the low at 24 cents. It runs to $1.92. That's 700% return. And you kind of get this hint because it was up at 195 before, so it just took that normal dip and up it went. And here were two sequence indicators, 1 to 9. This went to 8. Finally, here's a JP Morgan. Now, JP Morgan pretty much follows. This is a 56.5 call. These are all 5-minute charts. JP Morgan almost always follows Goldman Sachs. So if you really got a good feel for Goldman Sachs, then jump in on JP Morgan at the same time. But look at these returns. I mean, they're pretty incredible, from 7 cents to 43 cents. Now, it doesn't move a lot, okay? But that kind of return, makes people think you're nuts, is all I can say. But there was no volume hint here. It just showed when people jumped in. And the indicators I set up for the calls and puts and the underlying We'll show you how we really catch these. Here is an IWM, which is a 114.5 call. Now, if you had to buy 100 shares at 114, that's 11 grand you got out there. Here you got 7 cents or $7. Okay, if you want to do 10 or 100, and there's plenty of volume in here, you're risking $700 and you make 96 cents. I mean, that's 12 times your money times 700. You figure it out. It's a pretty hefty return. Okay, now here is another IWM call. Later in the week, we saw the first run up, and it runs all the way up to 201, from 7 cents to 201, 27 times your money. Here is a TZA, which is another ETF that has to do with small cap stocks. Went from 3 cents to 89 cents. You disregard big spikes like that, but that spike, probably guy put that order in, not on a limit, but just on the market, and they just sold him everything that he could buy. Anyway, up it went, and here's a good example of an overnight big jump, okay, from about 0.3 to 0.89. Pretty good, 0.75. So you get those nice jumps, and that's one of the big advantages. Okay, here's a breakout from, I wrote it down 3 cents, actually from 9 cents to $1.09, which gives you about 34 times your money, 3,400%. And here's what I keep telling people: look, somebody knows something. This is like watching the insiders trade. These are two 6,000 volume orders. Okay, so you find something like that on your charts, and you're ready to rock and roll on. I don't care whether I give you the hint or you pick it up yourself. I'll try to teach you how to do all this yourself on your own. So how do you get involved? Okay, this is pretty short and sweet. The website's pretty short and sweet. You can just go to the options trading room, watch the video there, which is this one, and then you'll get a thank you page, and you'll get about 4 pages of all the trades that were available in June to see the returns. And June is historically a very slow month, so I think you'll be pretty impressed with what the potential is. Wait till we get to September, October, or November, and you're going to go crazy, and you can quit for the rest of the year. Anyway, so you just sign up for the weekly trades. You join the membership website. It's basically $97 a month, or $297. I'm just selling it at a quarter at a time, so we don't have a lot of administrative stuff going on. You get our setups for Thinkorswim, which is, I'd say, is a $1,400 to $14,000 value, and what and how to trade what we trade. You can watch and learn from the weekly postings. You can use a sim broker, or what they call paper money in Thinkorswim, and you can get everything set up, and when you get comfortable with everything, you just go in and start trading. We send out the trades, the beginning of the week that we will be taking, so you can copy us. Okay, we're not giving you a recommendation. We're just saying I'm trading TZA or IWM or Goldman Sachs or whatever. Give you the exact contract I'm trading, and the price that I see. Okay, we'll also post the results of all our trades at the end of every week, so you can keep us honest with total disclosure here. And you can do some of these following things. If you want a new home, you lost yours in a big crash, you can buy another one. You can buy a dream car, travel exotic. There is an interesting thing. Nevada is competing for the high-tech battery factory for Tesla, and you can buy a Tesla for about 30 grand here when they get that thing done. Travel wherever you want, pay for college tuition for your kids, or just plain retire and trade in about 30 minutes a day, 3 days a week. So got any questions, just give me a call at 775-747-8829, and I will try to answer all questions. So hope this helps.